Hello and good morning. Holly Shields here, live from Kalkine studio in Sydney, and you're watching the Early Trades, a show where we share with you a glimpse of the Australian share market opening trade scene, along with the global and domestic drivers triggering market momentum. Today, Aussie shares have risen at the open, but have been weighed down by a heavy loss from Westpac after its cash profit missed expectations. The S&P ASX 200 index was up 0.3% as well. Aussie Bank Westpac was down 5% after its cash profit missed expectations. Global asset management group Janus Henderson was up 5.2%. Meanwhile, energy company AusNet Services soared 4.1% after accepting an improved $10.2 billion offer from Brookfield. And WiseTech Global was up as well, 3.5%. Meanwhile, on the losing side, medical equipment company ResMed was down 5.6%. Coal miner Whitehaven Coal slid 3.5% to $2.52, and St. Barbara lost 2.7% to $1.43. The week ahead is likely to be dominated by central bank meetings, particularly the Reserve Bank, which meets tomorrow in the shadow of last week's rates tantrum. The S&P ASX 200 dived 107 points or 1.44% on Friday as the yield on the 10-year Aussie government bonds blasted through 2% for the first time since March of 2019. The RBA's failure to defend its yield target on the 3-year government bond sharpened concerns by the bank, which will announce a change of policy tomorrow. Investors are bracing for the bank to abandon the target, a sign of higher rates which might be coming. They also might be altering their official guidance on the rates outlook as well. And today brings reports on inflation, manufacturing and job advertising. Construction data and building approvals are due on Wednesday. Retail sales and trade data on Thursday, and an RBA monetary policy statement on Friday. The AGM session rolls around today with updates from Waypoint REIT, PSC Insurance Group as well. On Wednesday then, we'll have AGMs from Domino's Pizza, Worley's, Cedar Woods Properties, and Thursday from Maya, Zipco, NIB Holdings, Domain, Credit Corp, AMS, and Downer EDI. Then on Friday, the AGMs will get are from Qantas, Spark New Zealand, and Integral Diagnostics. Well, moving on now to the IPOs, it looks like it's been a busy week, which brings us 9 new listings, including a couple held from the last week period. Step 1 Clothing was due to list on 11 a.m. Australian Eastern Daylight Savings Time today. The company sells men's underwear online. Judo Capital at 12:30 p.m. is one of the largest launches this month. The firm provides banking services to small and medium enterprises. Meanwhile, the rest of the week currently looks like this. Atom Resources, Renaissance Technologies to be listed on Tuesday. Austal Resources, C29 Metals to list on Wednesday. Hanlon Gold, Vulcan Steel as well on Thursday, and Green Tech Metals on Friday. Now let's have a look at the newsmakers from the morning trade. Well, ASX listed real estate investment trust Charter Hall Social Infrastructure REIT has acquired multiple healthcare and childcare properties for a total of $58.4 million. These acquisitions include a healthcare property in Heidelberg, Victoria, leased to a wholly owned subsidiary of ASX listed Helios. It also includes 2 premium childcare assets located in the southeast of Queensland. The company also increased its guidance as well. Its financial year 22 forecast distribution has been upped from 16.7% to 16.9%, an increase of 7.6% from the financial year 21. And energy company AusNet Services is set to be acquired by Brookfield after agreeing to the private equity giant's $10.2 billion bid. Brookfield is leading a consortium which includes co-investors Sunsuper Superannuation Fund, Alberta Investment Management Corp, and the Investment Management Corporation of Ontario, plus Healthcare of Ontario pension plan. Under the arrangement, AusNet's shareholders will receive $2.65 a share, plus an additional consideration if the scheme has not been implemented by the 31st of March 2022. APA Group was also granted due diligence, but will be closed off from the data room until it can lob a superior proposal at AusNet. The AusNet Board of Directors unanimously recommends that shareholders vote in favour of the scheme in the absence of a superior proposal. Singapore Power, which owns a 32.74% stake in AusNet, has said it will be voting in favour of the scheme. And meanwhile, media company Seven West Media has entered into an agreement to acquire Prime Media Group for $121.9 million. The bid represents a 57% premium to Prime Media's close on Friday. The deal is subject to a vote from Prime Media shareholders and is said to be held in December of this year. Prime Media Board has indicated it intends to recommend shareholders to vote in favour of the proposal. Seven West said that major shareholders representing 43.5% of shareholders had indicated their support for the transaction. And on the flip side, Big Four member Westpac has reported a cash profit of $5.35 billion in the 2021 financial year and announced a $3.5 billion off-market buyback. This is following the lead off the other major banks. And while its cash profit fell short of expectations for $5.24 billion, it was twice as much as a year ago. Meanwhile, statutory net profit rose 138% to $5.46 billion, and cash EPS firmed up 102% to 1.46. Westpac's net interest margin slid 4 basis points to 2.04%, whilst return on equity rose 372 basis points to 7.6%. Its city capital ratio rose 119 basis points to 12.32%, and the bank nearly doubled its final distribution, declaring a final dividend of 60 cents compared with its 31 cents dividend from a year prior. Westpac has also announced an off-market buyback of up to $3.5 billion of capital. Well, that's all for now on the early morning trains, but stay tuned to Kalkine TV because we have many more shows lined up for you today. Holly Shields signing off.